This is Billy Alvaro, Wayne Hartzart. We are Easy Sell Property Solutions. Welcome back to another episode of Cashing Out. Here today with a special guest, Rick Haberman from the Rock East Group. And we're talking today about private lending and the differences between all cash buyers and using a private mortgage bank. Rick has a very successful mortgage bank here in Long Island. He specifically deals with, I think exclusively, with investors. Is that right?
That's correct.
Yeah, investors. And what kind of volume are you guys doing right now?
Last year we did just about $50 million.
That's good. That's an impressive number. Yeah, absolutely. And we said earlier, it is a family-run business. So just give us what your role is, what your dad's role is, and just go into that if you can.
Oh, sure. So I'm a loan originator. My brother is a loan originator. And
That's Michael?
Michael and Howard.
Both of them, okay.
Both are loan originators. So what we do is we find the clients. We underwrite the deals. That's how I found you. Exactly. We underwrite the deals. We put the deals together. We're the face of Rock East Group.
Got it.
So
you got a face of radio. Anybody tell you that?
I do have a face of radio, right? Exactly.
Love it.
That's why they keep me behind the closed door in the cockpit.
Nice.
Exactly.
Oh,
there you go.
the pilot. There we go. There you go.
Pilot thing.
And what about Pops? What's your father do?
My father is he handles the financing, getting the money ready for the closings. He's an attorney by trade, so he
I won't hold it
the,
against him.
Right. He looks at the loan documents. He does the satisfactions when a loan is paid off. So
now your family has been in this business for years. Like Rock East, I know, was open since about 2010.
Correct.
But before that, before the crash happened, you guys were Gala Resources.
Correct.
And back in the day, I remember, because I had a mortgage bank, we used to utilize your guys because I think you had like a 65% stated loan or something like to that, wasn't it?
Well, it was pretty much the same formula we are now. We were just a larger company.
Big.
I mean, back in the day, 2005 or 2006, 700 closings, close to $150 million in loans.
Yeah,
so,
big.
But yeah, it was a lot. There
Big
was
business.
So I came into the business in about 2001, and my older brother Howard came in about 1998.
Beautiful. All right, so let's get back onto the risks. So we spoke about getting the appraisal done.
Correct.
What else do you look for in the borrower or in the deal for you to make a decision that you're going to actually lend?
First things when I look I always look at the borrower first. We talked about the loan application, see if they have some sort of experience. We do run credit on the borrowers.
So let's look about that for a second. So if somebody makes a cash offer on a deal and then they go to you for financing, if their credit is not up to par, you could deny them.
I can.
You can.
Yes.
So again, if somebody's coming in saying they're a cash buyer, if you're selling your property for cash, you really want to vet the buyers who are coming in, because if they are saying they're a cash buyer, but then they have to go to a mortgage bank, and the mortgage bank's approval is contingent upon your buyer having good credit, which a lot of people these days do not have good credit. And the second phase is they're relying on the house having to appraise at a certain value. Just be aware. Private mortgage lending is a good resource. It's out there. We utilize it when we don't have enough of our own cash. We've used Rick in the past. His bank is superb. But if it's a buyer coming in that hasn't done this business well, or he's new and he's relying on a new private bank, whether it's Rick's company or another, just be prepared, be understanding that they have to have good credit. If they don't pass that, they can get denied, and then the house has to appraise.
Correct.
Yep.
Fair?
Yeah, fair enough. And you got the appraisal, and then you also have how many deals, Rick, are you guys looking at where we kind of touched on in the last segment, the newbies, where the appraisal wasn't coming in, and then you were looking at them saying they're going to undercut the rehab costs and they're off on their ARV. How many of those deals are you guys denying? Because you could they could pass the credit, right, and you can then get to the next step and just tell them, nope, I don't want it.
Correct. I would say 99% of our clients
Get approved?
Are experienced when they come to us.
They are.
Yeah.
That's
the
good.
newbie, our newbie is very, very small portion. You know.
When your buyers come in, they're giving you a repair budget?
They give us a repair budget, which goes to the appraiser.
And is the appraiser then looking at that and saying, hey, Rick, this guy's saying it's $50,000 in repair costs, but Rick, there's no way this thing's going to come in less than $85,000.
Trees growing out of it, falling apart.
The appraiser doesn't look at a budget and say, I don't think he can do the project for $50,000. It's going to cost, say, $80,000. The appraiser's looking at it and saying, if he thinks he's going to get this kind of value, he needs to put in another bathroom to get that kind of value. And his budget's not showing another bathroom. Is he putting in another bathroom? Well, if he's not putting in another bathroom, he's not going to get this value.
Got it.
So our appraiser doesn't look, he's not a contractor. I've been in the business a long time.
So you can see the pitches, you'll know.
I can look at a house and say,
no way.
And there's no way you're doing it for this type of money.
Yeah.
You know.
Okay.
So then what's your response back to the guy who brought in the deal? What do you say to him?
I said, how are you gonna do it for this type of money? You know.
And will you undercut the amount that you're going to lend him?
I might undercut the amount to lend to him, even if it brings me below what my max LTV is. It'll just give me that extra cushion on my LTV.
Because it's all risk with you guys. You have to manage your risk.
Of course.
You have to.
Of course.
So it makes sense.
So, and this is not only family business, but it's also family money.
Right.
So we're looking to.
Who's going to care more about this money than you?
Right. Got to protect our money. You know.
And a lot of people don't realize that. I mean, you're using a lot of your own cash in these deals.
We're using a lot of our own cash in these deals.
Yeah.
So
there's a lot of risk, and you want to make sure you're managing that risk, having a good asset coming in, vetting the buyers who are coming in, make sure they have decent credit and they're good operators. I mean, that's the bottom line.
Exactly.
So to recap on that, though, so the appraisers now, your appraisers are going to go out. They're going to make sure it's got the right bedroom count, bathroom count, the square footage. They're going to knock that down and come back to you and say, listen, he's not going to be able to get it done, right? That was one criteria that he just mentioned to us.
Yep.
And then the second one is you or your brothers who have experience are going to go out and say, whoa, these rehab costs are just not in line with what we're looking at.
Correct.
And then who jumps in on that ARV then as well? Kind of with the both of you guys with the appraiser as well.
Right, exactly.
He actually did that to us when we gave him the deal for Brooklyn.
Oh, yeah.
We gave him the Brooklyn deal, that crazy Brooklyn deal we were doing out. And when I
project.
gave him the overall budget, he came back and he questioned. Rick says, Billy, listen, I've been doing this a long time. If you're going to get and look to sell this thing at 2.6, whatever the number was, I don't think you're coming in large enough. I don't think you have a big enough budget on your kitchen. I think you're way under budget because I think I had like a $30,000 budget for the kitchen. He's like, dude, it's going to cost you at least $70,000. So you picked up on that. Yeah.
Correct.
And he corrected me big time.
Right.
But I had the numbers buried in other areas. I was just trying
But the kitchen was the least of your problem on that house.
That was an issue and a half. We did I think 1 or 2 episodes on that.
Yeah, we did actually.
The squatters and court back and forth. I'll tell you, if we ever buy again in the 5 boroughs with squatters in there, we have to buy that thing at like 20 cents on the number because it was a headache and a half.
Up to 2 years of litigation.
Yeah.
It's challenging.
We got lucky.
Yeah.
It took us, like 4 months, 5 months to get those people out after the court?
A little more, maybe 6 months. And then you're going back to court.
I lost probably 30 days in court. I mean,
how much of your time did we lose after that?
Yeah. That's another thing, with investors, especially newer investors, you don't want to take it with tenants in there.
A lot of them, in Nassau, Suffolk, I find it's not bad.
It's not bad.
In our experience, it's not bad. 90 days, you're in and out.
Right.
But the 5 boroughs?
Well, 5
if you
boroughs,
have the right
yeah.
team.
Man, I don't care what kind of attorneys you have in the 5 boroughs.
But new investors might not know the...
I wouldn't advise any new investor. Ever.
I'm talking more of a new investor. We will fund homes that have occupants in it. But again, if it's somebody's experience, we've dealt with them in the past. That's what they do. I don't have a problem with that.
Yeah. It is a risk, though. On your end and on our end, it's a risk, definitely. You really have to know what the hell you're doing when you're buying with tenants. Yes. But I would stay away in the 5 boroughs unless you're basically getting the house for next to nothing for free.
Yeah, it's tough. Those tenants know the system better than you do.
Oh, my God.
We learned.
Boy, do they.
We learned on that one.
And there's plenty of attorneys that'll represent them to play the system with.
Oh, yeah.
Oh, man.
Mm-hmm. Mm-hmm.
So, listen, we're here today with Rick Haberman. Rick, this has been a really good interview with you. I think we might do another segment, another radio show with him, bring him back on, and just ask some more questions. You can reach Rick if you're out there and you want to get into flipping properties, or if you're currently flipping properties and you want to borrow money. I'm telling you, I vetted these guys already. They're good. We've used them. They're one of the best out there. The thing I like about your company is that it's all about relationship. You pick up the phone and you make the deal happen. I'm not going onto a website, filling something out, waiting 2 days to see if I'm going to get approved. Like, it's a relationship with you.
Correct.
So if you guys want to start a relationship with the Rock East Group, you can go online, www.rockeastgroup.com, or you can reach them at the office, 516-775-8800. 8800. Rick Haberman, Rock East Group. These guys are great. We are Easy Sell Property Solutions. We're here every Saturday from 12 to 12:30, 103.9. You can find us online at www.easysell411.com or 631-400-EASY. It's been a great episode. You guys have anything you want to end up with? before we turn off the mic?
Great episode.
That
Look
was
forward to
great.
having him
Thanks,
back one
man. I
day.
appreciate it. Thanks
We
for
appreciate you having you
out.
on.
Yeah, we're gonna have these videos put together for you so you can use them on social media and put it out there. I
All
wish you the best luck, brother.
All right, man.
Yep,
Thanks.
absolutely.
All right.